Pace Digitek Limited Q1 FY27 earnings conference call, hosted by Anand Rathi Shares and Stock Brokers Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Shweta Jain from Anand Rathi Shares and Stock Brokers Limited. Thank you, and over to you, ma'am.
Good afternoon, everyone. We welcome you to the Q1 FY27 earnings conference call for Pace Digitek. From the management team today, we have with us Mr. Venugopal Rao Medisetti, the Chairman and the Managing Director, Mr. Rajavendran P., the CFO, and Mr. Ajay Tambale, the Head Investor Relations. I would now like to hand over the call to Mr. Venugopal, sir, for his opening comments. Over to you, sir.
Good morning, everyone. Welcome all the shareholders, investors, and analysts. Thank you, everyone, for joining for this call. At a glance, we would like to explain that we have started the FY27 on a strong note compared to the FY26 Q1. And we do have a healthy execution across the energy and telecom businesses. However, the energy is taking a bigger leap compared to the telecom because of the demand, which is coming up very strongly. And we do have a continuously, we are building the integrated infrastructure in both the sectors that we are into. We are trying to do further backward integrations in both the areas so that our business potential is quite strong. And we do have an order book of about 10,800 crores, open order book, which also gives us a strong revenue visibility. On the manufacturing side, we have commissioned the additional 2.5 gigawatt hour line, which means that now 5 gigawatt hour BESS is operational. And then we also have planned for the 10 gigawatt hour. The construction part is over, and all the equipments have been ordered, which are expected sometime towards the end of September, which will get commissioned probably by November. October, November would be the installation period. Hopefully by December beginning, we would have 10 gigawatt hour operation facility, which would be the biggest operation plant in India by that time, because there are other people planning bigger ones, but we do have an advantage of having started early. So ours would be the 10 gigawatt hour facility by November or December first week, which would be the bigger, largest facility. In addition to that, we also have started the container manufacturing within the factory, because that was one bottleneck we had in the whole business of BESS. So we were trying to either bring from outside country and things like that, but there are no established ecosystem for the container manufacturing. So what we have done is that we have set up our own manufacturing facility, which is now the trial runs are going on, and in this month we are trying to complete the trials. In the sense, the sample containers will be produced, and then hopefully from next month onwards we'll have the batch production. On the project execution side, we have installed good amount of BESS in the last quarter. Also, we have supplied 300 containers, which is again a remarkable achievement from the factory. The 300 containers of each 5 megawatt hour have been supplied, which no other factory has done that in India. Then we also have started the project executions for other customers like Solar Energy Corporation of India, that is SECI, KPTCL, and Mahagenco, and Bonrada NTPC projects also have already begun on the ground. We do also have a lot of build, own, operate projects. So we are trying to balance the EPC and the BOO projects so that our revenues as well as the cash flows are maintained. On the telecom side, yes, the BharatNet, we got one project for Sikkim state, and the railways, we are doing the Kavach project, which is almost, around 30% has been completed. And on the research and development side, as we all know that, we are still buying the battery cells from China, which we do believe that, it is not good to depend on China supply for a long time for this battery cells, because the cell is a very critical component in the energy storage segment. So we have started a research center in Pune. It was inaugurated about 3 weeks back, and all led by the Professor Ogle, who is our independent director as well. And a team of almost about 8 scientists have joined. They're all very experienced PhD holders. And we already have started the project, the planning for the cell manufacturing, the technologies, which one is the right technology, which one is the right chemistry, and things like that. Then on the we also have signed a very good the cooperation agreement with Magnet. They are the company who have developed the power systems for the data centers, particularly the AI data centers, which is the new thing globally. And their products are approved by NVIDIA and other major chip manufacturers. So for India, we have tied up with them for providing those power solutions, coupling with our battery storage for all the new age AI data centers in India. There is, we already have started the work on the ground, and there is a good amount of traction coming from the potential customers for these kind of products. Also, Government of India has announced the PLI scheme for the cell manufacturing the last about 2 weeks or 3 weeks back for a 10 gigawatt hour. We are applying for a 4 gigawatt hour PLI scheme, which would support it's like a viability gap fund, we can also call it as. So the scheme is applicable for 5 years operations of the manufacturing and 2 years gestation. So total 7 years the scheme is available. We have tied up with the consultant, one of the big four as a consultant, to prepare the bids. And so on the strategic things, like, as I mentioned, that we are going from 5 gigawatt to 10 gigawatt hour to maintain our lead in the best manufacturing. And then we have plans for the indigenous cell manufacturing. Probably 2 years from now, we should be on ground in that project. Then we also have worked on this, the C&I segment of the BESS, which is very, very important, because the BESS what currently we are supplying is majorly for the grid scale applications, which are a 5 gigawatt and then a container. Each container is 5 megawatt. And then when we put them together, it becomes into either hundreds of megawatts or gigawatt scale. But there is another segment which is also very interesting, is that the C&I, that's called commercial and industrial applications, which are either below 5 megawatt or in the kilowatt range. We have got these products approved for large customers in India, where they are going to market our products in a big way. The first orders have already come in. And the product, it took about almost 6 months to get it qualified, including the field trials. Though now the field trials also successful. The customer is giving us about 25 numbers as their first trial order, but they are looking at thousands of such products in a year. So C&I is another good segment for us, which will also help, which will help us our the cash flows better, and the profits are far better when compared to the grid scale things. So on the outlook for the rest of the quarters, the 3 quarters, we do believe that there's a strong demand on the BESS. And then we also believe that the new initiatives that we have taken up would yield into some meaningful business. And we also have the strong order pipeline, and we are also bidding for almost 27 gigawatt hour of tenders by, and recently 1 or 2 customers have floated big like NTPC, renewable energy. and other customers have floated big tenders. So we are hoping to get some good business out of that as well. So these are the opening remarks, and I strongly believe that we are on the right path to achieve the revenues that we have guided of 3,000, anywhere between 3,200 to 3,400, which I believe there is absolutely we are on the track, and there are no concerns with respect to the business outlook as well as the execution capabilities. So with that, I would like to stop here and ask my CFO to get into the further details. Thank you very much.
Thank you, sir. Good morning, everyone, and welcome to this Q1 earnings call of PS Digitek. Now, I'll take you through the financial and operational performance for the quarter ended 30th June. So, we commenced our FY27 in a healthy note, supported by a strong execution across both our energy and telecom sector. Starting with this quarterly performance, our consolidated revenue from operations in Q1 FY27 stood at 555 crores, which is 51.3% year-on-year growth. So the energy business continued to be the primary growth driver in this revenue, contributing to about 79.5% to the overall revenue, while telecom and ICT segment contributed to the remaining 20.5%. So the primarily this growth is across our battery energy storage systems and the renewable energy projects, while our telecom and ICT business continued to contribute through our ongoing project execution. So now talking about the quarter-on-quarter change in revenue, there is a decline of from Q4 to Q1 from rupees 1,097 crores to 555 crores. So this sequential decline is primarily a function of the timing of the project execution and also on the milestone-based revenue recognition, and which is the inherent nature of our business. Q4 of the last financial year has exceptional strong execution across multiple projects where we have kickstarted, say, a couple of energy projects, and then making it as a high base for the comparison with Q1. So in Q1 specifically, while the execution continued across our energy and telecom businesses, several projects were at the initial stages of execution and revenue recognition. Also, what we have planned in this financial year is that we plan to reduce the revenue concentration in H2, which was there in the previous financial year. So this year we are trying to reduce the revenue concentration in H2 and try to spread between both H1 and H2. So H1 we are targeting about 45% of the overall revenue target, whereas the last year we did 35% in H1. So importantly, the execution momentum remains healthy because of our order book continues to be too strong, where we have about 10,800 crores of the open order book to be executed, and through which we can confidently say that we will be able to achieve the FY27 revenue guidance. Now coming to the gross profit stood at about 155.5 crores, translating to a gross margin of 28%. EBITDA for the quarter stood at about 86 crores with a margin of 15.5% compared to 14.9% in the preceding quarter. This sequential improvement reflects the project mix during the quarter, while we continue to invest in strengthening our manufacturing and execution capabilities. On the employee expense, for the quarter it stood at about 33 crores compared to 27 crores in the last quarter. This reflects that we are trying to invest in the manpower in the say energy projects specifically, and the manufacturing, and this helps the company's growth for the scale of operations. On the finance cost, the current quarter stood at about 28 crores compared to 34 crores in the previous quarter. This reduction is majorly due to the continuous focus on the treasury management and optimization of the borrowing cost. And also we have other income, which is about 28 crores. This is majorly due to the foreign exchange gains and also on the interest income on the bank deposits. So profit after tax, finally, we were at 62% compared to 54 crores in the previous year Q1. So this implies 11.3% of the margin on the revenue from operations. so which is in line with our estimates. So from the order book perspective, we continue to remain strong on the revenue visibility. So as of 30th June, we have a executable order book in energy for about 8,453 crores, and in telecom ICT we have 2,350 crores. So combined, we have 10,800 crores of order book to be executed. Overall, with the disciplined execution and the prudent capital allocation and scaling of our manufacturing capabilities, so the growth and the profitability remains healthier. So best manufacturing and the project execution and telecom execution continue to progress. We believe that we will be well positioned to deliver sustainable growth over the medium to the long term. So with this, I would like to hand over the call for the Q&A session. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Prathamesh Sawant from Abacus Investment Managers. Please go ahead.
Yes, sir.
Prathamesh, you need to use your handset and speak a bit louder.
Audible now?
Yes.
Yeah, thank you. So thank you for the opportunity. Sir, just one question on my front. So we have seen a 1,600 crore order inflow. So can we have a breakup on, how much was it from the ICT side, and of the total order book of 2,800 crore that you have mentioned, what will be the execution timeline on the ICT? Because this quarter on our execution front, our telecom revenues were down. So just wanted to understand on that.
Yes. So let me explain this. So we have about 1,676 crores of order inflows during Q1. You are right. We have in these two segments, one is the energy, the other one is the telecom. On the energy side, we have two EPC contracts. We have got two EPC contracts in this from NLC and DVC, so which is for about 1,410 crores. And the third one is from BSNL, which is optical fiber project, which is about 264 crores. While the EPC projects to be executed over a period of next 1 year time, the OFC project to be executed over the period of next 2.5 years. So the revenue recognition will be basis the execution timelines. Hope this answers your question.
Okay. And secondly, on the BESS front, how is the competitive intensity right now on the bidding front?
Sir, you want to
Yeah, I will do that. Yeah. So now there is a bit of correction in the bidding side, because in the last 6 months, maybe up to March, if you see, many people have aggressively gone, though they are not from the energy sector or they are not from this background. They were basically trying to see this battery energy storage system as a very new and lucrative business. So people have gone very aggressive in terms of bidding for the tariffs. But now they all have realized that it is not that easy to execute such projects, and that results are why I'm saying this is for two reasons. One, there are about one major project which was cancelled, a 4 gigawatt hour project by Maharashtra. There are about 3-4 people have won this, and they realized, and this was awarded almost 6 to 8 months back. And then they realized that it is not possible to execute at those rates. So they found some lacuna or some point in the contract, and they went to this APTEL, which is a arbitration kind of thing for the energy sector, and they won that, and that got cancelled. So in the process, customer realized that it's almost a 1 year loss of time for them. So that is one incident which we have seen. And second incident is that in Punjab, in the last 3 months, there was only one bid which was opened and the prices were discovered. So that was a far better price compared to the previous ones. So these two suggest strongly that the prices would be corrected and in the better, on the higher side. The bidding will be, people will be careful now. That is why, if I can also say one more example, like last week, there were three major tenders from NTPC Green, where we also have participated. The bidders were only 7, whereas in the previous cases, in one case, as many as 51 bidders were there in Rajasthan, and 32 bidders were there in Maharashtra. But in NTPC side, there were only 7 in one or two tenders, and others in another, only 8 in another tender. So, which also makes it a little clear that market is getting corrected, and only serious players will be in this game. Yeah, I hope I have answered the question.
Okay, sir. Thanks, sir. Thank you. I'll get back in the queue.
Thank you. We have our next question from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes.
Okay. Yeah. Thank you very much, sir, for this opportunity. So just, first I wanted to understand the order book of 8,400 crores odd in energy segment. So what's the execution timeline?
So we have two types of orders. One is the build own operate project and the other one is EPC project.
Correct.
So on build own operate we have about 4,074 crores, and on the EPC we have about 4,360 crores. So EPC contracts majorly has a timeline of 1.5 years of execution, and the subsequent O&M if it is a part of the contract. On the build own operate project, it is again it has two different parts. One is the solar plus BIS, where the execution timeline is 2 years, and the second is standalone BIS, where the timeline is 1.5 years. And post that, the maintenance period starts. For say if it is a standalone project, standalone BIS project is 12 years. Solar plus BIS is 25-year project.
Correct. And I got that. And given the mix, this quarter it was about 80-20, and given the order book proposition is also 80-20, so you expect this mix to continue? In terms of energy versus telecom.
No, we expect the order book in telecom to go up. We are in the process of bidding for a couple of projects. We estimate that this ratio should be between somewhere in the range of 65-35 or 70-30 when we close the financial year, between energy and telecom.
65-70.
But in the
to around 30-35.
65. That is 65 of energy and 35 of telecom, or it will be in the range 70-30.
I got it. So given the kind of visibility we have, only 65-70% you expect from energy, and energy, the cycle is largely in the range of 1 to 2 years, right? So isn't our this 3,200 to 3,400 a little on the conservative side? Ideally, we would execute more, right? Given the execution time and the order book visibility.
So what will eventually happen is that the practical work on ground will be more because of the build own operate project and the revenue recognition because of that particular project. So the revenue recognition will be basically on the EPC plus the standalone BIS of BOO. The solar plus BIS project of BOO will not be treated as revenue while it goes as a fixed asset. So that's the reason that we have 3,400 crores of estimated revenue.
So BO execution will come as an asset, whereas the EPC will come as a revenue, right?
Yes, correct.
Yes, absolutely.
And
these revenues would go as on an annual basis on the build own operate. We do once we close all this, we commission all these 4 projects. They will add to almost about 750 odd crores as a revenue, which is also going to be a good situation for it because that is the asset owned business.
Correct. And till now, BO, what's the cumulative execution we have done? The commissioning, is it close to 800-900 megawatts?
I think we have, Rajavan.
It's about 950 megawatt hour is the commissioning now.
Commissioning. And what's the revenue from this 950?
It is almost about 900 crores.
And as we speak, we are recognizing that revenue. I mean, it is coming into our P&L. I mean, how is that recognition happening in that BOA asset?
So it is the initial project from a standalone base where we have recognized the revenue basis that dealer ledger model of accounting.
Okay. Okay. Yeah. So I'm little confused.
It's like, I'll explain.
That is helpful, yeah.
Basically, the standalone battery system goes as a rental power. That means you invest money and you give it on rental. That is the technical word we can say. So that helps us to recognize the sale. And, whereas you go for that solar plus BESS, which we have got some 2 other projects, where it is basically treated as a power selling, not the rental. It's the power selling. That means the tariffs are per unit basis. So there it is a asset is in the books, but revenue is only the revenue that is coming as a monthly power selling.
Correct. And that is about 900 crores or what?
No, so what I stated is that 900 crores is the worth of order executed as on date in the MSEDCL project, which we have.
That is a standalone which recognizes on the balance sheet.
Okay, so I was just trying to understand this 950 megawatt. So what is the revenue potential for us? I mean, on a tariff per unit. Yes. So that if you can explain, yeah.
It's a 2,19,000 is per megawatt per month. Okay. So you can say for about 900 megawatt, it will be, around. Rajendra, what is the annual revenue from the MSEDCL? About 230 crores.
It is about 200 crores. For this quantum, it will be about 120 crores for this 900 megawatt.
Okay, and so 120 crores was this quarter revenue.
Yeah.
No. Yeah. It is like this. 120 crores is the annuity revenue which is coming in. But for this financial, for the MSEDCL project, as on date, compared, say, including the previous financial year, we have completed about 900 megawatt hour of commissioning, which is given us a revenue of 900 crores in terms of the P&L.
Okay. I got it. Yeah. And just, I mean, you mentioned that first half we are looking at 45% to 55% revenue mix, and based on the annual guidance, so we are looking at an execution of close to 1,000 crores in the second quarter. So what will drive the revenue in the second quarter for us?
So I stated it is about
going forward. Maybe Rajendra, I may explain. So it's like this. The battery energy storage systems are in the capital equipment. So the value of each container itself is about 4 to 4.5 crores. And we supply almost about 70 containers in a month right now, which will grow to almost 150 containers probably next year. So it would be our focus has been for raising the energy sector, because that is the new sector and which is lucrative in terms of order value. So we do not want you to see that the mix of this. Okay, there is no parameter that we should do this particular percentage of this or that. We are trying to see what is in the current scenario, current context, what is good for our company, and we are going in that direction. Whereas telecom is a project-based business where it also is not just a product that we manufacture. The product we manufacture in telecom is a smaller compared to the value of the project. So the project execution will take a lot of time on the ground, like fiber optic cable network. It will take a lot of time. So we, as a company now, we have 2 verticals. Yes, we keep nurturing both. But right now, the manufacturing output is much bigger on the energy sector compared to the telecom sector. So I would like you to see that way.
Okay, understand. And what's the margin profile in BS?
Sorry to interrupt you, Deepak.
This is the last thing. This is the last thing. Just what's the BS's margin profile we are working with?
So margins, we are trying to have a PAT margin of about 10.5 to 11% for the mix of say products and projects.
Okay, 10.5 to 11. And telecom has better margins, right? as compared to BS?
The telecom has better margin, yes. The telecom is about 11.
But the volume is not there in telecom. That also you must be aware. So.
Understood. And that would be it from my side. Would like that was very helpful. Would like to wish you all the best. Thank you.
Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to only 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. Ladies and gentlemen, please restrict yourself to only 2 questions per participant. The next question is from the line of Meet Shah from Fine Stock Investments. Please go ahead.
Yeah, am I audible?
Yes.
Hello, am I audible?
Yes, Meet, we can hear you.
Yeah, thank you for the opportunity. So, since you're targeting 10 gigawatt hour capacity by Q3.
Sorry to interrupt you, Meet. Your voice is breaking now.
Hello, is it clear?
Yeah.
Hello. Yeah, sorry. So since you're targeting 10 gigawatt hour capacity by Q3, can you roughly share what the capex per gigawatt hour looks like? And do you have like a technical partnership for or tie-up for BESS, or is this entirely developed in-house?
Okay. On the second part, I'll answer. The capex part, Rajendran will explain. On the capabilities, as you are aware, that we already have commissioned 2 lines of 2.5 gigawatt each, which means now our plant is operational at 5 gigawatt hour. Now we have taken a decision to go from 5 to 10 by adding a third line, which is 5 gigawatt hour. So one single line of 5 gigawatt hour we are going to install in October. The reason for going for higher capacity line is basically to reduce the operational cost, because if I have to separate 2.5 gigawatt hour lines, my manpower cost and the operational cost, including electricity, is more compared to one single 5 gigawatt hour line. So that is why we have gone for the 5 gigawatt hour. And so which means that when we touch 10 gigawatt hour, there will be one single line of 5 gigawatt hour. There will be 2 lines of each 2.5. So that it also allows us the flexibility of changing the product mix going forward. So and then we don't need any technical partnership for this, because we already have my plant is running 24 hours. And we have, it's our internal teams. We have selected the right, suppliers and for these equipments and all. So there is absolutely no issue on that. And the first part, capex part, Rajendran, you will explain that.
So on the capex, we have, I would say that we have 3 different phases. The phase 1 is the 5 gigawatt hour. The phase 2 is another 5 gigawatt hour. And third is the container fabrication unit, which is there along with the plant. So all put together, we have a capex spent of about 300 crores. And this capex spent is majorly the land plays a key role. The cost of land plays a key role. So the total cost is about 300 crores for the complete setup.
Yeah, it's land, building, and machinery all put together.
And it is funded internally from our private initial fundraising that we have done in terms of the private placement. We have funded using that amount.
Right. So the second question from my side is, so about half of your order book is build, own and operate. So for these BO contracts, what kind of margins in BO and EPC are there, and how exposed are they to sell price changes over the contract period?
So build to own operate and EPC has a different margin profile, because in EPC what happens, there is a product supply from our side plus the EPC that we do. So there are 2 different margins, one at the manufacturing level, the second one is at the project level, where the gross margin is about I would say about 12 to 15%. Whereas on the build to own operate projects, we have 3 different margins. One is at the product level, second is the EPC level, and third is on the say annuity business, which is at the SPV. So there are 3 different margin profiles. So while we have 12 to 15% as a margin profile between the product manufacturing and projects, there will be a separate IRR of about 12 to 13% on the SPV. So we have 3 different margins profiles for the build to own operate projects.
Right. So one last question. So last time you had said that 60% of your total cost is cell cost based on the lithium prices. So is there any changes as of now, and do you have any price variance clauses in all the tenders?
There is no, the cost remains, the percentage of the cost to the overall value remains the same. Lithium ion prices cost, yes, it's a variable factor which is impacting the overall price of the commodity. So the recent tenders are coming up with the price variation clause, while the previous tenders, the old tenders, doesn't have the price variation clause.
Right.
And we are well protected in terms of building a contingencies in the bidded prices.
Okay, sir. Yeah. Okay.
One added point on that is that we, being the manufacturer, can absorb some of these issues in terms of the raw material price increase. Because if imagine somebody who is executing this kind of projects by procuring the products from manufacturers like us, he would probably have the impact little more than us. But since we are the manufacturer and we are the project company, so the impact is lesser. There could be a small impact, but not that much, which will be visible on the balance sheet.
Right, sir. Yeah. Thank you, sir. So this is from my side. That's it from my side. Yeah. Wish you all the best, sir.
Thank you.
Thank you. Reminder to all participants, please limit yourself to only 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. We have our next question from the line of Sanket Saad from ARC AIF. Please go ahead.
Congratulations on great set of results, sir. Thank you for allowing me the opportunity. So, sir, my first question is, after reporting 555 crores of revenue in Q1, we'll have to get around 2,700 crores of revenue in the remaining year to meet our FY27 guidance. So how much business are we expecting from our different segments each, if you could sort of bifurcate that in the rest of the year? And how much are we also expecting from the African OEM partnership which we recently announced, and what are the EBITDA margins in that segment?
So,
Rajavardhan, I would start on first. Rajavardhan, just allow me on one point. See, 558 crores, and then we have almost 2,700. You're absolutely right. But the nature of the infra business which we are into, for that matter, any infra company, whether it's a road making or a company or electricity, there is an energy sector or the telecom sector, the Q1 is always lesser. I'll tell you why. For the simple reason that we are all working in a government sector. What happens is these projects are all bound towards a funded project, the funding that has been made available. So most of everybody for that matter would try to execute most of the projects towards the Q4 and get the payments received. And that is why the Q4 is always a very, the strongest quarter for any infra company. Likewise, ours also. But you need to look at last year we have achieved the turnover, but the Q1 was only 300 odd crores. So it's not that we do not have the orders or we do not have the business. It is basically that most of the efforts that have been put in to recognize the revenue on the Q4 will always take a little slow in the Q1 because of some drawings approval from the governments, departments and things like that. So Q1 is always a slower one for any infra company, including ours. However, we have a lot improved from previous year of 300 odd crores to now 558, which is almost 50% or so is the improvement. We do see that Q2 has been planned now. We have strong execution line where we are going to be much bigger than that. And however, achieving this 3,200 to 3,400 crores, I do not see any concern at all. Yeah, Rajavardhan, over to you.
Yeah. Yes, sir. My question was, yes, sir, I completely understand that Q1 is a bit slower than the remaining part of the year. My question was, what is the segment-wise contribution you see in the next 3 quarters to achieve this goal? That was my question, sir.
Okay.
Yeah.
Okay.
As I stated, we expect this energy and telecom to contribute to about 70-30 ratio or 65-35 ratio. That's what the numbers that we have. So this is point number one. The second point to your question is that you have asked one more question. The revenue target of 3,200 crores, majorly comes from the order book that we have as on date. Maybe there will be few additions to the order book, which may have a margin will go up by another 4 to 5%.
Yeah.
So this is PAT margin that you have mentioned or EBITDA margin?
EBITDA margin.
Okay, of course. Okay. Thank you.
Thank you. We have our next question from the line of Raj Kumar, an individual investor. Please go ahead.
Yeah. Thank you for taking my question. My question is that regarding our current order book on EPC and BO, what could be the impact of recent sale price rise, and at these levels, are those projects still sustainable? Yeah.
So when we have given the margin guidance for this financial year, which is about 10.5 to 11%, we have taken care of the increase in the lithium ion prices, which we have anticipated during the starting of the financial year. So as a steps to say mitigate this risk, we have done a couple of things. One, as we explained in the previous investor call, for the Q1 quantum, we have say stocked the inventory from in the month of March, which has enabled us to have a lower cost on the lithium ion prices. For the balance of the quarters, the project margins as to say will take care of the increase in the lithium ion prices, and that is well factored in the guidance that we have given to you.
Okay, so current guidance has taken care of the recent prices.
Yes, right.
And the second question is related to AI data centers. So India is projected to have like billions of dollars of data centers established in next couple of years. So are we looking into any like optical fiber work or any specific technology services that we can provide related to BES on those? And like, are we talking to any potential customers?
Yeah, I'll take this call, Rajendra. So, yes, the work is begun already, and we are speaking to some customers, and we are trying to bring some, demo equipment and try to prepare them and then showcase in our exhibition centers in our headquarters. So I think, yes, probably it will be a long journey, but we are going with, proper, plan. There's a big plan and a long-term plan. So we are working, and we already have approached some people, and hopefully we'll be, in the next 1 quarter, we'll be able to give a concrete, plans about the revenue, how does it work, when all that. So we are not at that stage today, but the planning is going on and the strong work is going on.
Okay. Thank you for answering my question. Yeah.
Thank you.
Thank you. We have our next question from the line of Rohal Barnawal from Arihant Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. My question was on the container fabrication side. We have delivered around 90 containers in Q1 versus if you compare it in the FY26, it was 178. How do we see the new quarterly run rate ramp up, sir, for the whole year?
This quarter, the Q2, we planned for 210 container supply in this quarter of Q2, that is July, August, September. And then thereafter, we'll be adding more because now our second line of 2.5 is commissioned just So we will be able to ramp up this more. And in any case, from January, as I said, we'll be fully operational with a capacity of 10 gigawatt hour. Basically, 10 gigawatt hour is almost about 2,000 containers and kind of say per year with the full efficiency. But then you always have to take some efficiency factor in terms of machine downtime and things like that. Even if I take 90% efficiency, it will be about 1,800 containers in a year. And divided on an average 12 months, if you say almost about per month will be about 140 to 150 numbers per month. Whereas we are now doing 210 per quarter, will become 125 at least per month in the next calendar year. So that is the plan we are now working on.
Got it, sir. And sir, on the all new three Q1 wins which we have in NLC, DVC, and BSNL are all EPC. And is this a deliberate shift? And what would we expect for the FY27 EPC versus BOO in tech mix?
See, like BOO needs a lot of investments. So we are going in a balanced way. We have secured 4 good projects on the BOO. Obviously, our effort is to complete those projects on time and start getting the revenues. And also, we are working with some investors, to bring them on board for the investment and also planning with them for the not just at a project level, at a whole level. Maybe for more projects, we are looking for investments. Once that is secured, we'll be able to further move aggressively and build own operate basis because funding requirement is very high. So that is how we are looking at. Whereas EPC, it is our own forte, and we will try to win every project that we bid. That is our motto for the EPC. So that's the difference between EPC and developer project.
Got it. So one last one is...
Sorry to interrupt you, Rohan. May we please request you to rejoin?
Okay.
Thank you. Ladies and gentlemen, please limit yourself to only one question per participant. Should you have a follow-up question, we request you to rejoin the queue. We have our next question from the line of Dhananjay Bagrodia from Alchemy Capital. Please go ahead.
Hi, sir. Most of my questions are answered. I just wanted to understand, our operating cash flow has been negative for some time. I understand we are obviously stacking up for inventory because we are on a high growth rate. But for each segment, what is the unit economics? Just trying to understand what cash flow can we expect for each segment and which segment is consuming most of the cash flow.
So what you are seeing in the balance sheet is majorly the telecom cash flows, which is showing as a operating cash flow, because the energy segment, the business has started in the Q4 of the last financial year. And moreover, in terms of the receivables, majority of the receivables which is there in the balance sheet is from the telecom sector, where we have milestone-based payment and also deferred revenues. So these two are causing, as per the accounting concept, this needs to be recorded as a receivable. So the receivables are looking big for the telecom specifically. On the energy side, it is better. It has a better payment terms. So the payment terms are segregated into advance and the payment on supply and payment on commissioning. And there is some retention portion which will be released with a maximum of 6 months. So we don't have a deferment, defect liability period for 2 to 3 years, unlike telecom. So energy has a better cycle. So what we expect is that once the energy business grows up and it contributes to the bigger top line of the business, so the receivable and the other, the receivable and the working capital has to go down because of the inherent nature of the contract or the tender terms and conditions. So that is what is expected. And also second point is that compared to the last March, standing today, we have reduced our working capital significantly. So the inventory and receivables have come down. So which we expect again by September it has to come down further, and we should stabilize in terms of the numbers by between March, say December and March, we should stabilize the numbers. But by say September, it is expected again to reduce.
Okay. Okay, fine. So, but any like little more quantifiable in terms of, let's say, for each segment, what is your working capital days?
So for telecom, the net working capital, when I say net working capital, it is inventory debtors, net of debtors. So the net working capital is about 4 to 5 months, whereas in energy it is expected to be about say 90 to 100 days is the net working capital cycle which is expected.
This is for telecom?
No, 90 to 100 days is for the energy. Telecom it is about 5 months. 150 days. And effectively,
sorry to interrupt you, Dhananjay. May I please request you to rejoin the queue?
We're continuing the same question, and even I'm going to ask another question. Okay, fine. That's fine. Sure. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, a humble request. Please restrict yourself to only one question per participant. Should you have a follow-up question, we request you to rejoin the queue. Next question is from the line of Keval Shah from Sanctum Wealth PMS. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, can we turn, it's just a continuation of previous question. So can we turn cash flow from operations positive in this financial year?
See, as I stated, it will improve over a period of time. By March, we are expecting that the cash flow from operations to be positive because the energy projects will be giving a bigger quantum of contribution to the overall top line. And again, the second point, as I stated, the telecom, in terms of the accounting concept, we need to have the receivables built in terms of the deferred revenue and also the milestone-based revenue. So that is causing a bulky, say, position for the receivables. So these two are expected to ease down by March. So this financial year end, we can expect that the cash flow from operation to significantly improve compared to the last financial year.
Okay, so that's it from us. Thank you.
Yeah.
Thank you. We have our next question from the line of Het Pradhan from the Money Family Office. Please go ahead. Yes, we can hear you.
Okay, so I have a question on as we expanding globally, as we are getting contacts from the Saudi Arabia, India and all. Could you please throw some light on it?
Sir, if you want to take it. So let me answer this. So what we have done today is that we have signed a MOU with a company in Saudi, and also we are trying to explore the market in Saudi for the battery energy storage systems, which we are in active say exploration, and we expect this year we should have some portion of the revenue coming from the exports. We have some small order which is executed in the last Q1. We have supplied a few containers to one of the company in Saudi for a smaller quantum, but we expect that this has to go up in the subsequent quarter. We are actively exploring to migrate into this Saudi market for the battery energy storage system.
Okay, and as we get partnership with the Magnet to enter into AI data center, and what type of service we are providing to them on, like, can you throw some light on it?
Yeah, I will explain that.
Yeah. Yes, sir.
See, this is a kind of partnership we have made with Magnet. Magnet is our partner for other telecom projects also for last 4 years. We have a very good relationship with them. So they have developed a power system for the AI data centers, and these products are approved by the large customers like NVIDIA and others. So what we have tied up with them is for the India market, where we will try to manufacture their products using their support, as well as couple that with our BESS, because for this AI data center you also need BESS, because the traditional data centers will use UPS and the diesel generators. So the new data centers will migrate into this kind of green energy solutions. So there are some products that will come from Magnite, and there are some products which we are manufacturing. We'll integrate them together as a solution and give it to the AI data center customers. So that is the idea of partnering with them.
Okay, sir. Thank you. All the best for next quarter.
Thank you. Thank you everyone for joining the conference call of Pace Digitek Limited on behalf of Anand Rathi Shares Stocks Brokers Limited. That concludes this conference. Thank you for joining us, and you may now disconnect your line.
Yeah. Thank you. Thank you, everyone. Thank you.